patterns to recognize are this. When you are looking at a stock, you want to look at the support and resistance levels. So let's say a stock is moving up, right? But then it pulls back down on you. Now, don't get me wrong. I know a lot of you guys have fallen for this trap. Okay, this is going to be a very important lesson for you guys on day trading. I learned this back when I was at Merrill Lynch. I'm going to share it with you because Merrill Lynch is never going to share this shit with you ever in your entire life because they're thinking that you're a sucker. And, you know, it's kind of true unless you learn. All right, so here's the deal. A pattern to recognize in the stock market is pretty simple. First of all, what you're looking for is you're looking for volume, okay? So you're looking for volume. Once you have volume, that's a very good start. Then you want to look for price action, right? Price action. Price action is pretty sweet because what price action is doing is basically like it's moving the price pretty constantly, right? It's not like just kind of sitting flat and, you know, not doing anything. So you want price action. You want movement. You want to go from like $1 to like $10 or something like that. There are stocks that do that in one day, so you should just be looking for that, right? We call those in the day trading group every single day. So there's no reason why. Today our stock went from $1 to almost $3. So, all right, these are the first two things you should be looking at. Now, here's an important thing. I want you to know that when you are looking at a stock, the patterns to recognize are this. When you are looking at a stock, you want to look at the support and resistance levels. So let's say a stock is moving up, right? But then it pulls back down on you. Now, don't get me wrong. I know a lot of you guys have fallen for this trap because you've lost money before. And what you do is you panic sell right here. Well, there's a problem with that. This right here, typically, so typical computer trades. These are typical computer trading patterns, right? So what's happening is, you know, you're seeing that the computer's bidding it up, and then the moment it bids it up, somebody comes in at a level where it's potentially a resistance line, and typical traders, especially those that you probably follow on social media, I'm gonna, you know, just kind of point those guys out. They would tell you to buy right here. That's what they tell you to do. They tell you to buy right there. Now, in my opinion, that's idiotic, okay? Because what happens is the computers will see that and they will trigger to panic sell. So they will sell off. 90% of volatility comes from computers in the stock market. The rest of it is institutions, large investors, and then the little guppy retail traders like yourselves. Okay, once you hit this level, there's a strategy called buying the dip, all right? Buying the dip is basically where you start seeing some candle action here, puts in a support, and then starts moving up, right? And then breaks out, okay? That breakout, you want to be buying right in this vicinity, right here. You want to be buying right here in this area. It's called a breakout buy the dip strategy. So you want to be buying this so that you on the run. Now, that's why I would wait until this resistance level right here, okay, this resistance level at the top, it is surpassed. You see me on my live sessions all the time and I say this, guys, don't buy until it gets to here. But the thing is, most of you guys have a fear of missing out, or you guys don't listen, because one of the most important things to learning is listening. You guys don't listen and you end up buying here because most of the traders that have never worked for financial institutions before in their entire lives are telling you guys the wrong shit because that's all they know. That's all they know. They saw it on social media, now they're teaching you how to do it. So instead, you want to be buying here. Why do you want to buy here? Because if you buy over the resistance level, after a confirmation, so after it breaks through, comes back down, then breaks through again, you can then go and buy over the resistance level. But here's the problem with that. If you're buying under the resistance level, it could fail. It could trigger computers to sell you off and panic sell, and you'll have to end up figuring out if it's a buy the dip strategy or not. So I just gave you actually two patterns here for you to recognize. One is a retest breakout through resistance, and another one is a buy the dip strategy on the way upside. So just give you guys a little bit of heads up. That way you don't lose money, all right? Drop a comment.